Welcome to Supreme Traders, taking your trading skills to higher levels.
Hello guys, welcome back to another video by the Supreme Traders. As you can see, so in this video I'm going to be explaining everything on how to grow small accounts using the smartest risk management and pure price action. So in this video we grow an account from $20 to 207 using only 3 entries, and they were dropped on our WhatsApp group. Of course, if you didn't join, kindly click the link in the description below, and don't forget to like, comment and subscribe for more free signals and free videos. So guys, we're going to be explaining everything step by step, and here is the video on how we grew the account from $20 to 207. And after the video we are going to be explaining everything step by step on the strategy how to grow the small accounts. Believe me, this strategy is gonna change your trading style. As you can see, those same entries here from $20 to 207 using proper risk management, as you can see here. So what we are going to do, guys, we're going to explain the whole strategy. The signals were also dropped on WhatsApp. You see, check out the sniper entry from the H4. Then if you go to the daily time frame, you can just see the same here. This was a sniper entry. So we're going to explain the entry using pure price action, guys. Believe me, this strategy is gonna change your life. So let's go straight into the video. So guys, coming into our analysis, as you can see here, we are on the chart of volatility 100 days. So guys, what you do here, guys, as you can see here, you just come to your chart, then you zoom here, then you draw a rough trend line here. As you can see, I'm just going to draw a rough trend line here, just like this here, just to spot the previous trend. So as you can see here, I've drawn this rough trend line here just to know the previous trend. Then after this I can erase it. I've seen that my previous trend was a downtrend. The sellers were in power. We need to explain how we took the entry on volatility 100 days. So as you can see, guys, I'm on my chart here, and there's one thing that I'm seeing here. You can spot a double bottom here at this certain other point here. So seeing this double bottom here, as you can see here, this is our confirmation number 1. The next thing you do is you're going to try and find your trend line here, guys, your confirmation trend line. Let me try and connect these points, as you can see here. So here I've got my confirmation trend line. Then after noticing these two here, you've got your double bottom and you've got your confirmation trend line. The next thing that you're going to do is you're going to find for the last trend that head to the last bottom. And of course, these are the last trend that head to the last bottom here. I'm going to highlight it with another trend line. So as you can see here, I've got an inner trend line and I've got the other major trend line here. And for the inner trend line, the next thing that I'm going to do, I'm going to zoom in. As you can see, guys, I'm going to zoom in and I'm going to find what was happening on that certain trend. So as you can see here, as the market was moving upwards here, it was failing to break the previous lower high. But at this certain point here, if you are to check out closely, guys, the market came down here, it rolled all the way down, then it came and formed this previous lower high, as you can see here. Then it went again and formed this bottom here. Then the next time it came up, it broke this previous lower high, as you can see here. And after breaking also this previous lower high, it broke this confirmation trend line here, this minor confirmation trend line with a strong bullish candle. So after noticing that, I was going to zoom in again and find how I can take my entry at this certain zone here. So you are going to take your entry at this certain zone just like this here, guys, as you can see here. Just after the break of this confirmation trend line, and your first take profit will be the major trend line here, as you can see here. So just like this, guys, as you can see, and use the smartest risk management as possible. You put your stop loss slightly below the broken level, such that when price tries to come back again, you are knocked out with a small loss. But if price goes all the way in your direction, you have a big profit. Don't be forced to close before you hit your take profit. That is where a lot of traders make mistakes. So as you can see here, guys, this was my first confirmation on volatility 100 days. And the next thing that I noticed is that the price went again all the way up to break the major confirmation trend line, which was the upper trend line, as you can see here. So after price broke this major confirmation trend line, there's one thing that I noticed. On the other video, guys, I told you that whenever price is going to make a largest move within a short period of time, we call that one an impulsive move. So as you can see here, from this lowest point up to this point here, you can see that the price covered a long distance within a short period of time. It covered a lot of points. From volatility indices, we use points. It covered a lot of points within a short period of time. So this one here was our impulsive move. Let me delete this 2 here. So this one here was our impulsive move. So whenever we notice our impulsive move, the next thing that we are going to do is we are going to touch the highest point of that impulsive move. Therefore, this one here is my highest point of this impulsive move, and of course the lowest point of the impulsive move is already highlighted on the lowest point there. So whenever I have something like this here, let me delete the arrow because you already know what that is, an impulsive move, as you can see here. So the next thing that you're going to do is that you're going to take a tool that you call the Fib retracement ratios. And as I told you before, that whenever the market is moving, it makes what? It makes impulsive moves and a pullback. And what is the nature of the pullbacks, of these pullbacks that are made by the markets? And I told you that these pullbacks are usually 40 to 50% of the length of the what? Of the impulsive move. So basically everything is highlighted by the Fib retracement ratio that I'm going to apply here, and I'm going to explain everything. And for the Fib retracement, I told you that you are using the flipped version of the Fib retracement of the Fib retracement ratios. So let me come onto the onto the Fib retracement and explain everything as smart as possible. So on MT5 mobile, you find it on the on the objects. You don't find it on indicators, you find it on on the objects. And here on trading view, you just come at this at this certain zone here, at this certain point here. Then you find the Fib retracement 2 here. And as I told you, you stretch it from the highest point of the impulsive move up to the lowest point of the of the impulsive move. So I'm going to stretch it from the highest point of the impulsive move here up to the lowest point of the impulsive move, which is here, as you can see here. Then after you do this, some ratios are going to be applied to your chart. Some ratios are going to be applied to your chart. And the next thing that you do, guys, is you're going to find the ratio that you call 0,618. So let me try and spot the ratio. As you can see, we've got a lot of ratios here. We've got this ratio, this ratio, this ratio. We're going to find the one that is written 0,618. So here is our 0,618. Can you check out, guys? 0,618. So this is what you call our golden ratio, because if you are to say 100 minus the 40% that I told you, the 40, you get something that is around 60. So this is our ratio that you are looking for. So after noticing this ratio here, I'm just going to try and spot any key level or any level of resistance or support that is nearer to that to that golden ratio, that is in align with that golden ratio. So this is my golden ratio, as you can see in this line here. And of course, this is my this is my first key level or level of resistance that is nearer to this to this golden ratio, as you can see here. So I'm just going to stretch a line that is touching these points here, this golden ratio and this point here, and stretch it all the way, just like this here. So as you can see here, I've highlighted the point that I'm looking for. So the next thing that you're going to do, guys, let's assume that currently the market is playing at this certain zone here. Let's assume that the market is playing at this at this certain zone, just like this here. Assume the market is playing at this certain zone here. The next thing that you're going to do is you're going to wait for a retracement to that ratio. We call it the golden ratio, and you take your your entry. So as you can see here, the market pushed all the way all the way down. Then it tested this golden ratio, as you can see here. Then the moment you see that the price has tested this ratio, or the point that any point that is nearest to that zone here, you take your buy entries, and of course you put your stop loss slightly below slightly below any key level. So let's assume I take my entry here. Where am I going to put my stop loss? You put your stop loss slightly below any key level. Example here, as you can see here. Then your take profit is very easy. Your take profit, you put it all the way to any ratio, maybe you need a swing trade, you put it to this certain ratio, as you can see here, just like this here. So for volatility 100 days, as you saw from the video that we just highlighted, we took the entry from this other bottom here, we added positions, and we kept on riding the trend. And these ratios now, guys, these ratios, they now act as your take profit zones. As you can see, I can highlight this one as my first ratio here. I can put a horizontal ray here, my first take profit zone and my second take profit zone, as you can see here. So this is what I can do and see what is really happening in the markets, as you can see here. So this is how we took our entry on volatility 100 days. It was a swing entry. The problem why a lot of traders lose is that they take an entry here, then after a $2 or $3 profit, they close their trade. But the next time they're going to make a loss that is equal to that. Therefore, they will just stay in equilibrium on the account size or even go into negatives. So what you have to do is that you have to aim to lose a little amount, maybe lose $2, but when you get into profits, enter swing trade and wait for your profits to reach even $100 or $200 per position whilst you are just holding that. And for it to be achievable, you just use this certain strategy here. This is the strategy that I use for most of my trades. So as you can see here, and now I need to explain on the current situation that is happening on volatility 300 days, as you can see here. So coming into volatility 300 days, the current structure here, what you need to explain is the other thing now, guys, which is very simple, guys. I need to show you something that is happening here. I told you whenever the market is moving upwards here, we expect a head and shoulder to form after an extension to the upside. If the head and shoulder pattern was going to form at this certain lowest point here, we are not going to take it as valid unless if it is inverted. So let me delete all these objects here. We've explained the entry that we took on the previous trade, and now I need to explain some mistakes that are made by a lot of traders. So what I need to do here, I need to erase all these drawing tools here, and I need to explain something. You see here we've got an extension to this downside here. A lot of people, they make mistakes on that one. You see, we've got an extension to this downside, and of course if we have an extension to the downside, you know that the market is heading to any nearest demand zone. Therefore, whenever price is at a demand zone, it is attaining its lowest level, its lowest price level, and of course we're expecting the price to shoot up and gain. So you see at this certain point here, price was at its lowest level in this certain zone here. Can you check out clearly? So if you can see here, price was in its lowest zone here, but there's something that happened in this area here, if I'm to highlight here, that will cause a lot of traders to lose. If I'm going to highlight something here, I'm going to start at this certain point here. Let me do this. Let me delete this 2 here. If you are also seeing this here, then you are the best trader, as you can see here. Let me find the head and shoulder pattern. This is my left shoulder, as you can see here, and of course I've got the head here, and now I need to highlight the left shoulder, as you can see here, the right shoulder. So I've got the right shoulder at this certain point here, and this is where a lot of traders lose. So what someone was going to do is that he was going to wait for a break of the neckline, then after that break of the neckline, a retest, then he enters his sell trade. So as you can see here, there was a break of the neckline here, and of course price came for a retest. Then after this retest, someone would enter a sell trade, but the price shoot all the way up, and you could have lost the trade. And this is just because you will be not following rules. As I told you before, that for a valid head and shoulder pattern that forms after an extension to the downside, we are only expecting an inverted head and shoulder pattern. For this normal head and shoulder pattern, we expect it to form at supply zones, and of course supply zones, we find them at the upper sides. And for anything that is going to form in this demand zone here, it should be an inverted head and shoulder pattern. And whenever we are going to see a normal head and shoulder pattern forming in this demand zone here, we are not going to treat it as valid. And for those who don't have the supply and demand system, the automatic supply and demand system, those who are finding difficulties in spotting the supply and demand, you just have to go to our Telegram channel and download the free indicator there. The free indicator is on our Telegram channel. And for free signals, as I told you, join our WhatsApp group. We drop free signals on swings and everything. So on the current situation for volatility 300, as you can see here, you have got an extension to the upper side, which is here, as you can see, and the price is playing in the supply zone, as you can see. And whenever we are going to see a formation of a head and shoulder pattern in this certain zone here, it will be valid, just like this certain zone here. If I am to zoom here and I apply my head and shoulder pattern, you can basically see this one here is the left shoulder here, and of course the head here. Then again, if I come to this certain point here, I'm going to try and find my right shoulder, just like this here. So this is the current situation on volatility 300. As you can see, we can find this head and shoulder pattern, and this one is a valid head and shoulder pattern. Number one, it formed after an extension to the upper side, as you can see here, after an extension to the upper side. But if we saw an inverted head and shoulder pattern after an extension to the upper side, we were going to treat it as invalid. But this one here is a normal head and shoulder pattern. So after this, as you can see, if you are to zoom here, you're going to spot a retest to this neckline here. This certain zone is representing our neckline. If you are to do this here, as you can see here, let me put a different color, maybe that deep yellow, just like this here, as you can see. So this one here is a retest to this major trend line, as you can see. So how we are going to take our trade is very simple here, guys. We're going to take our trade at this certain zone here, then our stop loss is going to be tight just above this key level here, just above that key level. Let me see if I can get a minor trend line at this certain zone here. So as you can see, we've got this minor trend line here. Let me erase this extension here. We've got this minor trend line here. So I'm going to take my trade at this certain zone here after this formation of the head and shoulder pattern, and I'm going to start with a $10 account again, and I need to raise it maybe to $300 or above. I'm just risking only a little amount, maybe risking $2, but aiming to get 30, 40 or 50 US dollars. So I'm going to go for sales here. You see, my stop loss will be tight just above that key level, just like this here, as you can see, and take profit will be all the way down to this this demand zone, as you can see here. So this is a good risk to reward ratio, as you can see. But if you lose this trade, you're only going to lose $1 or $2, but if you gain, the market is going to go all the way in your direction, and maybe you're going to even gain something that is even $100, 50 US dollars. Therefore it's a good risk to reward ratio. So as you can see here, guys, we have explained the simple strategies on pure price action, and we are going to continue in the next coming videos. So don't forget to like, comment and subscribe, and also join our WhatsApp group for free signals. Link is in the description below. So don't miss the next upcoming videos. Click the notification bell.
Hey guys, I just want to say a couple things about Supreme Traders. Ever since I knew about them, I've been extremely profitable with my swing trades in no time to blank counts. I'm finally making money trading. Thank you, Chipas, for all your premium services. Much love from United Kingdom.